Alexander, bienvenido.
Thank you. Thank you very much. Buenas tardes. Próximo 25 años antes viví en Islas Canarias. Para 5 semanas y estudié español, pero I started to forget it. Now I say, yo soy un perro, yo comprendo mucho, pero no hablo mucho. So I'll speak. My Spanish is really kitchen Spanish. So to talk about something serious, I have to speak English or some other languages. We could try Estonian, for example, a language which is spoken by 1.5 million people. In any case, thank you very much for inviting me to Chile. Always a pleasure to be here. I've been here several times before the pandemic, and so when an invitation came from Capitaria, I was very happy to hop on a plane and get here. This is since I'm going to be speaking about psychology of trading, I want to show you a very old work ID that I had. New York, St. Luke's Hospital, elder, attending physician, psychiatry. Same face, same hair. What really made my name, the book that lots of people have read, is El Nuevo Vivir del Trading, The New Trading for a Living. It's a book that I wrote first. I first wrote it in, I don't know, 30 years ago. And then about 10 years ago, I completely revised it. The publisher asked me to revise it. I gave myself, I said, about 3 months. It took 1.5 years. I completely rewrote this book. And really, it's the book that, the key concept of the book is there is no magic to trading. Trading is serious work. And trading stands on 3 legs: psychology, technology, and money. Psychology is how your mind is organized. Technology is what methods you use to make your decisions. How do you decide where to buy and where to sell? And money is how you control capital in your account. If you have a brilliant trading system, but you make bets that are too large, a small series of 2, 3, 4 big bad bets can ruin an account. And it happens to lots of people. So all these 3 things have to be combined: psychology, technology, and money. But we have less than an hour today, and they asked me to concentrate on psychology of trading. So that's mostly what I'll be speaking about today, but I'm sure that I will deviate into technical analysis a little bit and into money. Psychologically, intellectually, trading is very easy. And by the way, many thanks to Capitaria, they took my American PowerPoint and translated it into Spanish. So I didn't do this job, but they took my text. So intellectually, trading is easy. I mean, all you have to know is how to add, subtract, multiply, divide, approximate numbers, percentages. Many years ago, I became friendly with the director of a small private school where my children studied. And even after children finished school, I still we'll get together for lunch with the director of the school. And one time I said to him, the kids really must learn 2 topics. Everything else is additional. It's human relations and money. And the director says to me, we teach human relations all the time, but why don't you come and teach money in school? So I went to high school, and I taught a course for a year called Money and Trading for the kids. And I said to the kids, I will open a small account, $20,000. And the kids say, oh, small account. And we will trade that account in class. And if we lose money, it's my problem, it's my money. But if we make money, I'm going to donate half of it to school, and half I'll distribute between class members in proportion to your work. And not everybody will be able to finish this class because some people I will kick out during the year. So we started for laziness. We started and we made money, and so a child can, an intelligent child who is 15, 16, 17, 18 can trade with a manager, of course. But emotionally, it's the hardest game. When you sit in front of the screen and the market, it's easy now. In the evening, markets are closed. But if you look in the mirror at 10 o'clock in the morning, when the market is open and moving, see the emotion and you feel the emotion. Market is going your way, or especially if market is going against you. So intellectually, it's an easy game. You don't need a college degree for that. Emotionally, it is the hardest game in the world, the hardest. And here's an example. Here are some very famous people who tried to trade large amounts of capital to manage money. I don't know if you recognize any of these faces. This guy, know who he is? No? No. This guy, you know who he is? You know who this guy is? No? Okay. So very good. That's Kasparov, world champion, chess champion. He started an investment fund, and he ran it into the ground. This guy is Peter Thiel. He is probably the most important politician outside of the government in the United States. He's a very rich man. He was an early investor. He created PayPal together with Elon Musk and some other people. He invested in, was the first investor in Facebook. He is now a very large force in American politics, like J.D. Vance, vice president. That's his man. He made him a senator, and now he is clearly a very smart and a very successful and a very rich guy. So he started a hedge fund, and he ran his fund into the ground. And this is Myron Scholes, Nobel Prize in economics. His fund was long-term capital management, which created a worldwide crisis some years ago. Again, crashed. So in any case, high level of brains does not guarantee success in trading. By the same token, I have known several people whose pictures I don't have, who are like normal people who made meaningful money. I live in New Hampshire now. I used to live in Vermont. It's two small northern states near the Canadian border. And one time I opened the newspaper. A local guy died and left. He had no family. His wife died and he had no children, no family. And this guy, he was a soldier during the Korean War. Then he was working at a gas station, pumping gas. And then he retired, but he was bored with retirement. So he got a job at a big box store. He was just sweeping floors on a part-time basis. That was his career, lifetime. He left $7 million, $6 million to the hospital, which looked after him, and $1 million to the library where he studied all his stuff. Turns out all his life he was investing in dividend-paying stocks. Going to the library, he was very, very tight with the dollar. He never bought firewood. He always found where a tree fell. He would cut the tree, fallen tree, and take a very economical guy. But he was, in any case, $7 million. And he is not the only case. So what did people like that have, which those certified geniuses don't have? What makes the difference? The difference is psychology. The difference is psychology, being cold about trading, being disciplined. The two biggest obstacles in psychology are greed and fear. Greed and fear. Greed, of course, you make a profit. Now you make a second profit and maybe third profit. Now you feel you're a genius. Now you put really big money on the market. Now it fails. The trade fails. So you put even more money on the market, fails again. And greed, well, there is no reason to put more money because you cannot win 100%. I don't win 100% of my trades, no. But you have to have a trading method that wins more often than loses. But the trade size always the same, right? So if somebody is greedy, they start oversizing things. The other thing is fear. I don't have to look too far for an example. I have this brilliant wife. She is a top-level financier, and every once in a while she tells me she missed this and she missed that. She saw a beautiful trade, and she was afraid to get into it. I said, well, next time you tell me about the trade. I have no fear. And that's my problem, not having fear, because without fear I get into dangerous situations sometimes, not always. But these are the two things you have to be aware of. You also have to be very cautious when you look at advertising. I call this financial pornography. How to get rich quick, boost your income, money. Anytime they show you money in an advertising, and this is a rented car, what is it, Ferrari or something distorted. The guy, you can rent a Ferrari for a day for maybe $500-600, and you get a lot of advertising out of that. In any case, you have to be very careful. When you see these kinds of pictures, just hold your pockets, because the difference between success and failure is very small, and it doesn't take a lot to turn success into failure. You have to be very careful. You have to be very alert. The single best thing you can do for your success as a trader. Here comes the big thing. The single best thing you can do for your success as a trader is to keep a visual diary of your trades. A visual diary, and I'll show you several examples now coming up. Because most people, well, first of all, most people lose money trading. That's how the world operates. And sometimes people think, well, I'm smart. I'm a lawyer, I'm a doctor, I'm a university professor. Clearly, I have smarts. Well, I showed you pictures of very smart people, world chess champion, Nobel Prize winner. Smarts, you need normal smarts. You need the smarts to put gas in the car. You need the smarts to that's enough. But you need responsibility, discipline. And the best way to develop discipline is to keep records of your trades. When I began, when I found this thing for myself, I hate keeping records. I don't like keeping records. My accountant keeps records for me. My wife manages all the household, everything. I can make money, I don't like counting money. So I forced myself to start keeping good records. And now I have records of probably 99.5% of my trades. There are very few trades I don't have records on. Just small trade in and out. But 99+% of my trades, I have a diary, a visual diary for every trade that I have. I didn't bring my computer with me today. They told me that the PowerPoint is loaded and don't bring the computer, but I have on my computer every single trade that I took in the computer is about 2 years old, so I have 3 years history on this computer of every single trade. Why? Why is it important? Because most people, and nobody keeps, well, very few people keep good records. People trade like running forward. Oh, here is one. Let's buy Apple computer. Let's buy Meta stock. Let's buy this. Let's do this. Well, and what? So you make money, you lose money, but you haven't learned anything. I know when I enter a trade, I have two goals. My first goal, of course, is to make money. I cannot achieve it every time. But the second goal, I will achieve every time. I do achieve every time. And that's to become a better trader. And I become a better trader by keeping good records so that I record them, and I will show you my review process for records, for trading records. My own trades become my teacher. I hope I convinced you a little bit. If I mean, this is a bit of a joke. If I was a woman going to a party, right, and I want to make my face beautiful, I would sit in front of a mirror with strong lights so that I can see every blemish on my face. I would want to know everything that's wrong with my face. Then I would put paint there and go into the party where lights are low, and I will be the most beautiful woman at the party. But I know what my problems are, right? And that's why I can go and be the most beautiful one. So that's... there are several ways to keep a trade journal. I used to keep it in a... so I called it a trade journal. I used to keep it on paper long time ago. When I began this thing, I would go into art supply store and buy big albums like artists have, and I would print charts out, all times, black and white charts, print entry charts and paste them on the left, and then print exit charts, paste them on the right. Then I kept my trade journal in Word. I kept it in Excel. Together with a friend, I ran this website. We created a trade journal on the website where my trades are recorded. You can't see it very well, but in any case, it really questions about the trade. But now I keep my trade in the most... I went back to being very simple. I take snapshots of every trade. This is my trading screen, by the way, and I'll say a few words about this trade and about technical analysis. So this is a trade, a real trade that I took. I can't even ALGN, I think, a stock, and this is... God, I can't see the dates here. Should have brought my computer. But this is the program on the left here that I use to keep my to capture my trades. So this is the screen. This is what I look at. This is what I look at, and make my. I should get a red pointer that I brought. Maybe better. Still not visible. In any case, this is I recommend to everyone. The program is called Snagit, and it's multilingual, so you can do it in Spanish, in English, in any language. I have no business with them. I mean, I bought my own version, so you know it's. But you get they give you a free 2-week sample. At the end of 2 weeks, you'll be in love with it. And then now I think the price is $60, used to be less. And you own it for life, forever. So this is the screen, and with Snagit, I grab a picture of the screen. And now Snagit allows me to write on it. So for example, it allows me to write, this is the name of the trade. It's why I traded. It's a repeat, means I traded it before. It points out 9.2 ATR, why I traded it. But why I traded it? So the stock is peaceful and sleepy and nothing happens. And then it goes crazy. You see how, I mean, this is crazy behavior. This is not normal behavior. And when I was busy practicing psychiatry, and a crazy person came in, I was responsible for helping to make them less crazy or not crazy, right? So somebody comes, and I don't mean crazy like, like to be locked up, but, a person who is a man who is destroying his career because of things he does which he shouldn't be doing, that type of craziness. So my job is to bring him to normalcy, but in trading it's different. When I see crazy behavior, I figure these people are going to lose money, and somebody but when they lose it, somebody has to take it, right? So why not me, right? I cannot cure them. They're strangers, right? But I can recognize craziness and go for it. So stock goes crazy, 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 and finally there is this absolutely insane long bar, and price closes off of the peak. The next day, it opens within range, and as it slides below the peak, you see this red line. That's when I sell this thing short, and here I take profits. It's a 4-day trade. Sell short, take profits. Right? It's not a genius trade. I did not buy here and I did not sell here, right? I sold short here and I covered here. Does anybody not know, by the way, I love selling short. Does anybody not know what selling short is? You understand selling short? Selling short. Do we have anybody here who sold short? Nobody sold short? So very few people did. I highly recommend you try it. Stocks go both ways. Stocks go up, and surprise, surprise, they also go down, right? So you can make profits on the way up, or losses, profits or losses on the way up, and you can make profits or losses on the way down. It's called selling short. Okay, I'm going to give you a 30-second explanation how selling short works, right? But I actually wrote a book, Sell and Sell Short, so it's available. I don't know if it's available in Spanish, but the point is that selling short is what professionals do, and amateurs don't do it. So if everybody sitting here buys, right? Everybody bets on a rise. So if I want to bet on a rise, I have a whole room of competitors. If I bet on a decline, competition is much less. And money comes faster, stocks go down fast. How short selling works, how buying works. You see a stock, it's selling for $50, and you say, I think it's going to go higher to 60 or to 70. So you buy it, you wait, suppose it does go to 60 or to 70, you sell it, you get your $10 or $20 profit. Everybody understands that. Now suppose you look at a $50 stock and you say, this is garbage. It's not worth $50. It's going to be 20. Right? You call your broker, or you do it online. Nobody calls brokers anymore. You go online and you say, I want to sell this dog short. You have to have money in your trading account, because the broker takes what this, say, I want to sell 10 shares of a $50 stock short, $500. The broker takes $500 from your account and locks it up as security. He borrows 10 shares from some pension account that stock is sitting there, and he sells that stock, and he puts a note in that account that this person owes you 10 shares. But you have nothing to worry about because I'm holding the price of the stock for you. The stock goes down. Suppose it does go to 20. You call your broker, say, cover. So broker goes and buys back those 10 shares at $20. He puts them back into account where he borrowed them from, and he gives you $30 per share, 10 times, because you did 10 shares. So it's exactly like buying, it's only reversed. But you sell borrowed shares, and brokers have a system for borrowing shares. Right? It's either free or there is a small charge for that. If everybody wants to sell it short, then it's difficult to borrow that stuff. My broker has a list, hard to borrow. So if I want to sell short something from hard to borrow, there is a charge. But normally no charge, doesn't cost anything. Okay, so that's shorting. So that was an example of a short trade. Now, let me show you. And by the way, let me actually come back for a second. The previous speaker said, well, first of all, he showed a bunch of photographs. And I know those guys except for one. Charles Dow died before I was born. But the thing he said, it was very interesting. Very few people say that. Said, there is price and there is value. There is price and there is value. And those are different things. For example, let's say you want to buy a shirt. And you say, oh, I'm going to spend $80 to buy a nice shirt. You go to the store, you see a shirt you like, but the price is $110. You say, that's okay, I'll wait for it. There'll be a sale. I'll come back. Yep. So you feel that price is above value, right? Now suppose you are going to a conference and on the way you spill a cup of coffee on yourself. You run into a store, you need to buy a new clean shirt. You don't care what the price is. 110? Okay, I pay 110. So you have, but you have a concept. This is price, this is value, and so you act on that. Now, what is price of a stock is very easy. You look at the right edge, well, it's closed here. This is the price, this is the price. Price is in your face, right? But what is the value of the stock? I think that if you do two moving averages, one fast and one slow, every price you see, it's like a snapshot. Stock goes up a tick, down a tick. It's a snapshot. This is what people are paying for the thing now, this second. A moving average takes 10, 15, 20, choose the number of bars, and figures out an average price. So average price is like a composite photo, right? Composite photo. So if you have a fast moving average, this red line, that's a short-term consensus. And you have the slow moving average, that's a blue line, that's a long-term consensus. And I say that value lives in the zone between two moving averages, between fast and slow moving average. So when prices are below value, let's go shopping. Let's think of shopping. We need much more than moving average. When prices are here, I would say, this is crazy. Value is here, and price is here. Reality is going to come back. So when I sell it short on this bar, I take profits here. Maybe it will go lower, maybe not, but it came into value zone. It was overpriced, it's now normal. Normalcy, I have nothing to do there. I want to find craziness. I want to find deviations and trade against deviations and for return to normalcy. This is one way of trading that I like, and this is a fairly short-term trading. So if you want to buy a stock and hold it for a year, 2 years, 5 years, leave it to your children, you don't care about moving averages very much because you better study fundamentals of that thing. But if you're a short-term trader, and for me, again, my time frame, my horizon is maximum 2 weeks. And if I feel the technical analysis, for me, it's like headlights on a car. If I want to drive at night from here to Valparaiso, the headlights will not show me, well, but they will show you enough in front of my car that if I drive at a normal speed, I will be fairly safe. So technical analysis shows us space in front, and the longer term, the less you see. That's my view of this thing. So what I will show you now is a series of 3 traits. I'm actually, they're real traits from about a month or 2, about a month or 2 months ago. There is a little system I'm experimenting with. So I've been taking traits using that system. And I want to show you how I enter traits, how I exit traits, and the most important thing, psychology. I return to those traits 2 or 3 weeks later, and I will see, and I evaluate my performance, my actions from a distance. Right? I sit in front of that mirror and see everything that's wrong with the face, right? Except I don't put paint there. I learn from those mistakes, from any mistakes. So, trait number 1, it's a trait diary. Again, it's not a very good screen. It's hard to show, but I hope you see it. You see this red line. It's some English biotech company. And the system is simple. It's a directional system. So the green line is the bullishness, red line is bearishness, and the black line is directional movement. How directional is the stock? It's a publicly known system. There is not, you can read about it, directional system. Very, very worthwhile. So green line is on top, red line is on the bottom, and the black line penetrates above red. I buy the stock. And I sell it here. Again, it's not a genius profit, right? It's not like, I bought it at $5 and I'm selling it for $500. But there was a nice little move from here to here. Money is made. Why I sold? I look at this chart pattern, and you can see how the stock opens high. See, this was the top. Now there's this wild rally. It opens above the high and then closes near the bottom of the bar. And I call this pattern a flipper. To flip is to go like from head goes down, feet go up. Right? It's a flipper. So I see a flipper, and I take profits on the trade. I bought it $22.30, and I sold it at $23. But I sold some size, but it was less than $1 profit. Again, testing a new system, so being very modest. Now the question, I see that the entry was correct. The entry was correct, but was the exit correct or not? Who cares? Let's do another trade. That's how most people think. Well, I come back 2 weeks later. This is exactly the same thing. I take a picture. This is where my signal came in. This is where I bought. And this is where I sold on a flipper. Well, if I was a genius, I would have held for 4 days more. But as a simple trader, I sold it here. And look what happened 5 days later. Right? So that flipper really kept me out of trouble. And by the way, I use it. To me, it's a pattern. I see it on the charts. It's you see what you want to see, right? Some of us want to see girls. Some of us want to see boys, right? You see what you want to see. I want to see flipper. And I write, and again, this is from my diary. This is my first directional trade. That's the system that I'm testing. Entry too high, exit on a flipper good. Stock dropped when Johnson & Johnson. It's a biotech, and they were trying to get in partnership with Johnson & Johnson, and Johnson & Johnson said they were having second thoughts about this marriage. So in any case, doing this really says to me, okay, you've got to, Alex, you've got to work more careful on your entries because the signal, yeah, entry could have been earlier, exit was fine. Okay, next trade. So another trade, PSA, I think it's some kind of airline. Don't even remember, not a fundamental analyst. So, and again, I'm showing you from my diary, right? So the weekly chart on the left for long-term view, the daily chart, the stock goes down, and I love this pattern. Breaks below support and back, breaks below support and back, breaks below support and back. Why does it matter? So people are buying it and putting a stop below the low, and professionals push the market down, trigger the stops, buy it up, and then the stock goes up. So I see whoever is, this stock doesn't want to go down. It has a chance, it has a chance, it has a chance. Now the uptrend is on, and here I got my signal. Green line on top, red line on the bottom. Again, it's a publicly available system. You don't have to buy anything. It's available, directional system. And directionality goes inside. I buy it here. What do we call this pattern? Yeah. Opens at the level of the high, puts a finger, I call it a finger to the sky, and closes at the low. Bought at $304.40, sold at 307.72, 307.22. Small profitable trade. Exit on a flipper. Huh? Good trade, bad trade. Who cares? Let's just do another trade. That's how you know what. But there is an education sitting here, which we can get if only we keep a record. And so 2 or 3 weeks later, I go back, and here. So here was the signal. I entered the next day, and this was the flipper. Again, if I was a genius, I would hold it for 1, 2, 3, 4 days more. I would have sold it here, right? But I don't know how to sell it here. I sold it on a flipper. And stock went down, down, down. And I wrote a comment, good entry on a pullback. I was not seduced on penetration day, meaning that I waited to buy. I waited to buy in the value zone. You see, the signal I could have bought here. I waited for it to come into value zone. I bought in the value zone between 2 moving averages. And then when I saw a flipper, I exited, and it was not a bad idea at all. Oh, and here is a criticism comment. I wrote, I could have shorted here, a long finger to the sky. I missed a shorting opportunity, right? So, don't you see value in this thing, right? Where I make my decisions, return to them, and evaluate them, rate my performance. One more trade. I think I hope not to run you out of time or to put you to sleep here. Okay. One more trade. This is can't even see what was it. This just resolution is not very good, and I didn't write it on the screen. So, but here's another trade. Look at this. Down, 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 and this is a double bottom, which is one of my favorite patterns. So bottom is made. All the geniuses put their stops right at the low, below, a little bit below the low, and here they break the low for 1 day, and then it returns. So all the stops are wiped out. Putting a stop immediately below the lows is not a good idea. And here is the signal, and here I buy. And another flipper, and I sold here. We go. I return to it a few weeks later, and I write a criticism. My entry was too high. My entry was too high. I did not wait. I should have waited for a pullback into the value zone. I did not wait. Exit was good. So you see, another point. Before I enter any trade, when you talk, it distracts me. If you could do it a little later, maybe. Thank you. When before I do any trade, I enter the trade into a spreadsheet. So I don't just look at it, oh, this is a beautiful girl. I think I'm going to marry her. I say, no. First, I want to meet her mother and see what mother looks like, because that's what she's going to look like 20 years later. Just to use an example, right? I have a relative. I have a relative, this successful businesswoman, has a career, has two grown sons who are very young men who are very successful, and she decided to start dating now. So she met this guy that on the internet, of course, whom she liked very much, and the first thing she says to the guy, not the first thing, but when they start getting a little, getting to know you, what is your credit score? Yeah, it's a legitimate. It's a strange question for me. I met my wife in a park, and still here 20 years later, very happy. But the point is, it was not on the internet. It sounded very strange. But the more I thought about it, it made sense. It made sense. What is your credit rating? I mean, we're grown people. She's in her late 50s, right? Mid 50s, yeah. The guy is a little older than her. And at this age, I want to know what the credit rating is. You know what the highest credit rating in America? There's the rating. There is a rating system. I have a rating. Everybody who has credit has ratings. So the highest number is 900, right? It's above 720 is considered excellent. But basically, if you're really good, you should be above 800. So, in any case. Yeah. So in any case, I deviated. I deviated into the area which is a lot of fun. But this is the rating system I use. Again, you will have access to this PowerPoint. But for every stock, I want to know, first of all, when the stock will declare earnings. Fundamental analysis is big and hard. But there are some fundamental points that everybody should know. If you're interested in dating the stock, you should know when the stock is having an earnings date, because an earnings date it can jump, and it can jump much, and it can jump for you or against you, right? So don't trade before earnings. I call it 3 barriers: earnings, short float, and dividends. And then I write down what is the monthly chart, what is the weekly chart, what is the daily chart, and I have a very short abbreviation system. My comment about the stock, my entry, my stop, how much I'm going to risk on this trade. This is small trade, so it's $1,000 risk. And then based on this risk, so if I'm entering at 39.55, and my stop is at 36, it means I'm risking about $3.50 per share, right? And if my risk is $1,000, I'm allowed to buy 282 stocks. I round it off to 300. in other words, before I date this girl, I want to meet her mother, I want to know her credit rating, and does she cook? Okay. But you see again, it's a boring part of business. It's not as interesting. It's not as interesting as looking at stocks or watching the TV and saying, Apple sanctions, China, Meta stock, lawsuit, this company, rare metals, gold. Like it's fun. This is boring stuff. And this is what makes me a successful trader, boring stuff. So a couple of things for the end. And I stuck my old hospital ID here to say psychological advice. Don't count money when you trade. When I have a trade going, if you ask me, so Alex, how are you doing in this trade? I can tell you I'm a little ahead, I'm a little behind, or I'm a lot ahead. 3 possibilities. But I will not be able, I will physically not be able to tell you how many dollars I'm winning or losing. It took me several years to train myself, because if you count money during the trade, your head is in the wrong place. If you have a friend who is a doctor, you go to, you visit him and you say, oh, it's 11 o'clock in the morning, so how much money you made today? And if he says, I made $986 so far today, do you want him for a doctor? Yeah? So don't count money during the trade. Counting time will come later. I count, close the trades. Trade for the quality. Trade for the quality, money will follow. Another thing, don't tell people about your trades. Obviously, nobody tells about bad trades, but don't tell about good trades. Because once you tell your friends about your trade, you become, that trade now represents your self-esteem. So you have to be right about it. And if your friend calls and says, hey, you told me you bought the stock for $20 and now it's 18. Oh no, that's a normal pullback, a normal little pullback. Now it's 16. Friend calls again. It's an opportunity to accumulate it cheaper. Now it's 12. And you look at this garbage and you say, why am I holding it? I should have sold it instead of added to it. But why didn't I sell? Well, because I told my friends what a great thing it was. Don't talk your positions. Well, I could go like that for a week, but we have only 40 minutes, and I think I overdid my time already. So, do we have time for a few questions, maybe? I'll put my magic translation system on.
Sí, you need this.
Or everything is clear, yeah.
In Spanish for you.
Or everything is clear, so that no questions.
Las preguntas en español, hay traducción online también, para la gente también que está en streaming. Por favor.
Bueno, respecto de los 3 ejemplos que diste de trading y después revisar lo que pasó después de los eventos, considero yo que cada operación es casi única. ¿De qué te sirve tus notas para el futuro? ¿Son aplicables?
Of course, I look at those charts and I say, that first of all, this directional system makes sense so far. It puts me into trades. My method of exiting when things get a little too high is also good. But what's not working as well as I should is I'm sometimes too quick to enter. I should wait with my entry until it comes back to value, to buy not right away, but buy in the value zone. So basically, from those, well, I showed you 3 trades. So far, I've done about 12 of this. It's a new thing that I'm testing. It's a worthwhile method. My exits are good. My entries are a little sloppy. Be more careful with entries, and continue to continue. That's my lesson from this thing.
Muy bien. Next question. Segunda pregunta, por favor. Sí, ahí está.
Primero que todo, gracias por la presentación, pero en uno de los ejemplos que tú mostrabas, se podía observar que quizás tú no respetaste el patrón que habías presentado en el ejemplo anterior. ¿Cuáles fueron los juicios o conversaciones que tú tenías cuando dijiste, no sé, quizás en este momento tengo que entrar un poco antes de lo que me dice el patrón? Porque una cosa es lo que tú dices, lo técnico, la tecnología, pero cómo también tú trabajas en tus operaciones las conversaciones que tienen que ver con tus emociones y con tus estados de ánimo cuando estás frente a una posición.
You know, I don't really have to. I got to the stage, to the point, and it took me many years to get to it, where I really don't have much emotion about it. I have about as much emotion about those traits. If I was running a cleaning shop, you know, people bring their clothes to me and I get them dry cleaned. Someday it's raining and no customers come in. So what I'm gonna cry? No, I'm not gonna cry. Somebody comes in and there was a wedding and everybody spilled wine and there are so many clothes to be cleaned. Am I going to be happy and celebrate that it's such a good day? No. I have a cleaning business. I have an average volume. Sometimes it's a little more, sometimes it's a lot more, sometimes it's less. That's basically my level of emotion of this thing. Now, I did not get to it in 1 year. I did not get to it in 10 years. I got to it after a long period of time. But that's the place you want to find yourself. And the way you get there, trade small size. If you I hope I have a few more minutes to say something. You actually opened a very important thing. My advice to every trader, especially to a trader who is in a losing position, I have this system which helped. I live that system to this day. A money management system. I call it the friendly handcuff system. You put yourself. Especially if you're in a losing mode, or you find yourself in a losing mode, or if you're a new trader just starting out, but especially if you're in a losing mode, you're hurt, you're upset. You put on a trade. And you worry about that trade, and because you're worried, you cannot make logical decisions. What do? It reminds me back when I was practicing psychiatry actively. Now I do it very seldom. Old patients occasionally call, but a patient would come in with a sexual problem, performance problem, and they're anxious every night. What's going to happen? They will try and they will fail. They already know that they will fail, right? So I always said to patients like that, we start treatment. I have one condition for you. No sex until I give you permission for that. Whew. You know, I don't have to worry at night. My doctor told me not to do it, right? And we start working on the process. Then eventually they come in and say, oh, you know, it just happened, and it was very good. Well, that's nice. So the same thing with trading. The friendly handcuff method. I suggest, especially after a loss, you select a very low number that you're going to risk in this trade. How low? I'm going to risk $100. Right? Nothing. It's what you spend for dinner, maybe. I'm going to risk $100, and you saw my. I'm testing the system with $1,000. My normal trading size is much bigger. I'm going to limit myself to $100 risk. If I am buying the stock, I will say I risk only $100. If it's a $20 stock, and I'm going to put my stop. I'm going to put my stop at $18. So there is a $2 risk. And your total risk is $100. 50 shares, right? 50 shares max. So I'm going to risk $100 per trade until I make $1,000 profit. Once I make $1,000 profit, I will increase my risk 50%. Now my risk is $75. It was 50 before. 50 I said, or 100? 100. Okay, so now it's $150. Now it's $150. And I will trade at a $150 risk until I earn $1,500 profit, 10 times, right? Now I can increase it by 50% again. So from 150 I go to 225, right? If you do that, the amount of risk is so low, you don't worry about money anymore. And you hate this number, because with this number you cannot make meaningful profits. But the only way you can make profits is to increase your risk, you have to deliver, you have to make that $1,000. You have to make that $1,500. So you focus only on performance. Money, you stop thinking about money. That's how I stopped thinking about money. I started with a number like that. Well, I started with $500. And I eventually got myself to where I trade real size. Yeah. Took a year and a half. Yeah, but that is the best way to come out of a bad spot. I call it the friendly handcuff method. Okay, maybe.
The last question, yes. La última pregunta, por favor.
Hola, doctor, buenas tardes. Le quería hacer una pregunta desde la perspectiva de la psicología y del control de emociones. ¿Qué opina usted acerca de estos dispositivos de tecnología de biorretroalimentación y de los otros dispositivos que ayudan, por ejemplo, a través de sonido o efectos visuales a controlar las emociones en el minuto que uno, por ejemplo, sufre una pérdida o está entrando una emoción que uno sabe que puede distorsionar el plan de trading?
Magic doesn't work. I've been in this business long enough, and I have seen every magic imaginable. I have seen Elliott waves, I have seen neural networks, I've seen portfolio insurance, I've seen it all. And now, of course, it's AI and the whole thing. Magic doesn't work. It doesn't work. I just gave you a system for managing emotion that works, the friendly handcuff system. You train your mind by living trading, by keeping risk size so small as you stop having. Look, you saw how the market was the last few weeks. Yeah. Did anybody watch American market? Yeah. Yeah. There was a point where it looked like if this continues, I could lose about $200,000. It's not a lethal amount, but it's an unpleasant amount for me, right? And I really didn't have much emotion about it. It wasn't pleasant, right? It wasn't something that but I came out of it fine. Right? I stuck to my system. The market worked. I lost some money, not much, and here we are. A week later, I'm trading and making money again. Markets are more normal now. No, you see what I mean? And that was a serious business. You know, a couple of $100,000 is maybe for somebody it doesn't matter. For me, it mattered. Yeah, but again, there was no biofeedback. There was no magic, anything. There was a friendly handcuff system that trained me not to have emotions, treating it as a business. I mean, I don't know what your profession is, but if you're a lawyer, does your profession make you anxious? I mean, you have emotions. You like a client, you don't like a client. The judge is good, the judge is bad. I mean, you have normal day, activities of daily living, right? Normal daily stuff. Things are some pleasant, some unpleasant, but you don't have strong emotions about it. This is your profession. This is what you do. So, if you're a lawyer who gets like this all the time, biofeedback is not going to help you. Why should it help you in trading? It's just another profession. So no, it's all the computer between your ears. That's what you have to work with. Well, thank you very much.
Un aplauso, por favor, para el doctor.
Okay.
Le vamos a entregar un premio. Thank you, Elder.